All right, welcome to Market Shares. I'm your host, Tony Blodgett, and today I have the great pleasure of interviewing my friend, my coworker, and just an overall great guy, Jeff Dreyer. Jeff, welcome to the podcast.
Tony, thank you so very much. You're so gracious. It's really good to be here with you today.
Yeah, no, I'm looking forward to this conversation, and I think we got a lot to unpack and go over. There's no shortage of things to talk about in the mortgage industry these days. So let's get right into it. I like to start these conversations, kind of learn a little bit more about our guests, and everyone loves kind of the journey of how we got to this industry to begin with. So why don't you start there and then let's see where this conversation takes us. How'd you get in the mortgage business?
Oh my gosh, it's wow. My professional life started when I was about 8 years old, painting my father's rentals for him. He never did teach me to spell the word allowance, but he taught me to spell the word hourly wage when I was about 8 years old. So there weren't any child labor laws back then in the covered wagon era. But I had gone through a number of different professions, and I had some experience in finance. And my father in particular always had instilled in me the importance of home ownership. And so and I had an interesting experience in buying my first place. And I thought, something, the mortgage industry looks like such an interesting field. And also, I thought about, what do I really want to do with my life? Because I had gone through a number of different professions, and I thought, to do something that is really going to impact people's lives and to be able to, be something that I really had a pride in doing. I thought, wow, what greater thing to do than helping people into owning their own home? And
Yeah.
that's really what led me to the mortgage industry.
Well, I think talking to you before, I think we got in this business at very similar times. Didn't I got in, July 7th of 1997 was my first day as a loan officer, and you were pretty close to that, weren't you?
It was the latter part of, the beginning of November in 97 was when I took my training and became a loan officer with a company called Mortgage Market that was kind of the lost leader of the mortgage industry. We were the first mortgage company that was coming out doing 0.0 origination fee loans. And they had a great training program, much better than most companies. It was like they'd hand you an application, which is called a 1003. They'd hand you a 1003 and go, well, get out there and find some customers. And Mortgage Market had this 3-week training program, and they really went over all aspects of the mortgage industry. And we really learned more than anything how to go out and market ourselves.
Well, I remember the days when a lot of lenders charge origination fees, some didn't. The divergence that caused, rates look better when you charge a 1% fee, but then you got the higher fees, and realtors are asking why your closing costs are so high. And I was really happy when the whole industry got away from charging the origination fees, and it's just a much more simple structure now. If you want to pay discount points and buy down the rate, then you can do that. But I remember the good old days, and good stuff. Well, I'm glad to know that I got at least a little bit more experience than you in the mortgage business. I got you by a few months, buddy.
Yeah, well, I got you by a few years as far as age goes. It took me a while to find the industry. And, once I found this industry, I really haven't wanted to do anything else. I know that you've been through the same ups and downs that I have, in that we've watched some huge changes go on in our industry, and many of them, I think, for the better. I like the way that we operate these days much better than kind of the old days.
Well, I actually really enjoyed the industry in the 90s. It really, because, in the 90s, we learned like how to qualify a borrower for a home loan. Like I remember
Yes.
learning income and debt ratios and, how credit's got to be there and capacity and all of these things, the 5 C's of lending. And I remember as we got into like the early 2000s and we started having kind of some subprime, reps come along and start, challenging us like, well, hey, well, let me see the last 5 loans that you declined. And I'm like, why? They don't qualify. They're like, well, let me just take a look at them. And all of a sudden they're like, oh, well, we could do this loan. I'm like, well, how can you do that loan? Like I qualified them. They don't qualify for a mortgage. And it really I think for those of us that got in the industry before the days of the no doc loans and the stated income and all the craziness that we saw leading up to the crash in 2008, I think for a lot of us, it kind of baffled our minds. And so when you say, I really enjoy the way we do things today, in my opinion, it's a little unfortunate that we had to get so heavy handed with the regulation to really just get us back to where we were before all of these crazy exotic, mortgage products started coming out. What are your thoughts on that?
I absolutely agree with you there, and it's really interesting in that there are a few products coming out that are a little more outside the box, and I believe it's because we as lenders are seeing there's needs that are out there that are just not being filled, and so there are different products that we're coming out with that really help feed those needs, but they are the type of products where we're not putting borrowers in jeopardy, where we're doing safe and really responsible lending. And I think that's the important thing, because lending had gotten very irresponsible. And the main qualification was, can you fog a mirror? And if somebody could fog a mirror, they could get a loan and they could get 100% financing up to $500,000 with a 580 credit score. And when I saw that product come out, I shook my head and I said, we're probably going to get there's probably going to be a lot of trouble in this industry. And there sure was.
Yeah, well, I wish I saw it coming sooner because I was still buying real estate in 2006 and 2007. So I probably should have stopped a little bit sooner. Yeah, no, I agree with you about the products. We actually see some really unique products coming out with like the CDFI banks and some of that stuff. I mean, there actually are some loan programs out there today that are true no doc loans and even some of that stuff. The difference is that they require large down payments, really high credit score. And like you said, they're intended for self-employed borrowers and people who need this product to qualify. And some of it is really to serve the underserved communities around our country as well. And that's what the CDFI is, the community development financial institutions that are providing that financing. But, I think we got to be careful, because that's kind of how it started originally the first time around. And I do think we have a lot of regulation in place today that will keep it from happening again and getting out of control. But you're right. We do need product innovation to help those that can't qualify for conventional financing. But I also always believed that when you're talking to a borrower and you're qualifying them, there's really two decisions that need to be made. One, our decision as a lending institution, like, can we provide you the financing? And the second decision by the family, like, can we afford this payment? Because just because I could put someone into a certain amount of debt doesn't mean that based on other factors in their household budget that they can afford that monthly payment. I mean, I really feel like that's the job of a loan officer, is to help educate a client on budgeting and making a good, sound financial decision that's going to allow them to be in the home for their family for years to come. And this is where this whole idea a few years ago that came about, that you could just, push button, get mortgage, not to pick on any lenders in particular, but it's not as simple as pushing a button and getting a mortgage. There's a lot more education that comes along with helping a family make the right decision when purchasing a home.
Absolutely. I could not agree more. And the fact is, I believe not just to qualify people and put them in a home or put them in a loan, but it's really to look over their entire financial portfolio and to help them with some creative solutions to make sure that home is going to be a good, solid investment for them. And I think that a lot of times those people are selling themselves short that do the push button get mortgage because they're not getting any good advice. It's so important to look over, like many times I'll look over a financial portfolio and look at the credit, the income, and the assets. And you look at the big picture and you go, hey, did you realize that your debt ratio is going to be very high? Maybe if you paid off this car or paid off this debt with the proceeds from the sale of your home that you're selling, rather than rolling all that money into down payment, you pay off these things. That new house payment is going to be much, much more affordable for you. The last thing you want to do is have borrowers move into a house and then be house poor. They got a brand new house and they can't afford to go out for dinner on Friday night, or to take a vacation. It's really important to look at that whole financial picture. And I think that really, as a responsible loan officer, you want to help people to improve their quality of life. And I think that as an experienced loan officer, we can do that. We can help improve people's quality of life and to help them to have the nicest home possible.
Yeah, well, look, I couldn't agree with that more. It begs the question, do you have like the ideal client? Like if I had to say, what's the perfect client for Jeff and his business and the way you like to support people, what would you say that client looks like?
It's always fun to do the big loans, the jumbos. But Tony, I got to tell you, what really floats my boat is to help a first-time home buyer. And I had an experience recently where a married couple with children, they had two small children. They came in to see me. The wife was gung-ho to buy a house, but the husband, when they came in, he was visibly shaking. I mean, his hands were trembling when he walked in. And, I realized at that point and this was in the middle of COVID. And, so there were not a lot of people coming in, but they asked me, Jeff, can we have a face-to-face with you? And I was like, absolutely. So they came in to see me. The husband was shaking. The wife was like she was bent on owning their own home and raising their kids in that home. And I sat down with them and we spent about an hour together going over all of their financials and also, sharing with them, what an incredible investment a home is. Besides the fact that you're raising your children in their own home and not in an apartment or a rental that you can be kicked out of or displaced easily, or the rent raised on you, because rents have been going crazy in our area. But to be able to raise those kids in their own home. And, we had a great conversation. By the end of that conversation, the husband was laughing and smiling. I was able to really demystify something that was really foreign to him. And so they're now living in their own home. They friended me on Facebook. I see pictures of the kids. I see them in their own backyard with a play set up, and they're back there with their animals. And, I mean, that's my ideal client right there. Knowing that I helped a family out, knowing that I helped put this family in this home, and seeing them enjoy the fruits of all of their efforts as well. That's my ideal client, Tony.
Yeah, man, I love that. I couldn't agree more. And I think that we sometimes we lose focus. That sounds like you don't lose focus, but I think loan officers in general can lose focus sometimes, and they do start getting very transactional in this industry. Real estate agents can do that too. And that's just a great reminder that behind every, transaction that we do, really it's a family, that we're helping. And, that's a great reminder of that. And I couldn't agree more. I did loans for many, many years, and I think I feel the same way. It's those people that are, but really for me, it's the people that came to me thinking that they couldn't buy a home, and then being able to help them realize that they can, and like the joy that comes from like, really, we can actually do this. We can get our own home. And sometimes it's not something you can do immediately. It takes work, and they got to maybe restructure some things, but you can give someone some advice and they follow it. And, a few months later, they're homeowners, and it's very rewarding when we can do that sort of stuff. So
It absolutely is. Now, Tony, I want to ask you a question, and that is that, when I came to New American Funding, in fact, even before I came, you actually flew down here to meet me, and we had a breakfast together with my manager Bob Haley. Great time together, and I was able to find out more about you and more about this company, which is it's turned out to be an incredible company, and I'm so grateful that I made that move at that time. But since that time, you actually went from regional sales manager in our region. You're now the national sales manager for a company that's in 48 states. That's a huge responsibility. How do you find time? I mean, here you are interviewing me. I love having a conversation with you. Tell me about how you've gotten to where you've gotten in this industry. It's to me, it's mind blowing. It really is.
Well, thanks, Jeff. Gosh, it's been a long journey, right? And I won't bore you with all the details. But before I came to New American Funding, I did work my way through another organization called Mortgage Advisory Group, and I was the president and COO of that company. So I had been in executive leadership before I came to New American Funding, and it was a smaller company. And in 2013, really 2014 is when I made the move here to New American and just had my 8-year anniversary. Um, there wasn't a lot of opportunities to be in that executive level position because the smaller companies were kind of getting consolidated. And so I knew I needed to join a larger organization. And, I always wanted to get back into executive leadership. I just didn't know when the opportunity would present itself. And after, growing this region here in the Northwest for 8 years and being part of the senior leadership team here at New American, I was actually it kind of came up amongst my peers. They were like, we feel like, it's a big organization and it's a very flat organization. We don't have a lot of layers of bureaucracy and all these different, layers of management here. But I think that the retail sales division and my peers, the other SVPs, which is what my position was before, really felt like we needed to have like a unified voice kind of in the boardroom, if you will. And so I kind of, because of my experience in the past and the relationships that I had made, I kind of got, kind of ushered in to that position. And I found it for me very refreshing to have the opportunity again to be kind of back at the executive level. And really, the way I see my position, Jeff, is that look, we have over 900 salespeople at this, or retail salespeople at this organization, 200 branches across the country, and I see myself as that liaison. I'm that portal that is going to take the voice of the originator on the street and make sure it's represented in the boardroom. And I have a unique background that gives me the ability to understand the inner workings of a mortgage bank, and I have experience as a loan officer, so I get what loan officers deal with every day on the street. And so for me, I love my job, I love my position, and I'll tell you how I make time for all this stuff is I am a scheduling freak. Well, really, my assistant Brittany is, but I have really good support. And, I just make sure that my calendar is well built out, that I'm spending the time doing the things that I think are going to bring the most value to the loan officers and to the organization. And then I just follow a schedule. Like, one thing I tell loan officers who aren't super busy is take a look at your schedule for next week and show me what it looks like. Just open up your calendar and let's take a look at what activities you have scheduled. My calendar is literally full every day, and I wake up and I do those things, and I make sure that I have enough room in between to focus on catch up and getting back to people. And I never want to go too long without returning a phone call or a text message. So you have to orchestrate those times throughout your day to be able to do that, and then fill the rest of it up with ways that you can bring value to your sales team and to the company. So that's what I do. I also spent some amount of time, Jeff, getting and this I thought was an important part of my career, was getting my CMB. So I'm a certified mortgage banker, and that's a big process, but what it forced me to do is learn the areas of the mortgage banking industry that I didn't otherwise have exposure to. So I'll give you an example. There's a lot of questions about servicing, and when you're a loan originator, you don't learn about servicing regulations and requirements. You don't learn about capital markets and hedging and pipeline management and the capital markets functions. But if you want to get your CMB, you have to learn those things. And so it forced me to learn, where I had some gaps in the industry, I've been able to fill those in. And that's what's necessary if you want to move into this sort of a role, because I'm now interfacing with the capital markets team. I'm on the compliance, review board. I was on a meeting yesterday, an hour and a half meeting, where we were reviewing how the decisions that we make on our retail platform are impacting our fair lending, how our fair lending looks to a regulator, those sorts of things you wouldn't ever be exposed to as a loan officer, except for a few classes here and there. But you have to learn it, if you're going to move into a role like this. And I love that stuff.
Do you know that that's one of the reasons that I came to New American Funding? And I like we were saying earlier, I've been in the industry for 25 years now, and just shy actually of 25. I don't want to overestimate there, but one of the reasons I came to New American Funding was I was told that we keep and service our loans. And that just blew my mind, because every mortgage company I'd ever worked for, no matter how big, I mean, I've worked for some large national corporations, they all sold their loans. And so it felt like, you get to know your clients, and you had developed this close relationship. You do this loan for them, you close on time, you get them in the home, and then you sell them.
Yeah.
And it was like when I talked to you and Bob, and you said, no, we keep the servicing, so we keep that relationship with our clients. To me, that was huge, because I'm a very relational guy, and I love the fact that we get to continue that relationship and keep those clients as our own.
Well, here's the thing about that. So there's a lot of mortgage companies, mostly larger mortgage companies like ours, but a lot of them service their loans sometimes, right? Yeah. So most people do it when it's financially advantageous to do so. So I'll give an example. Like during COVID in March of 2020, the secondary market went away for government loans. And so a lot of companies had to pivot and start servicing those loans out of necessity. It wasn't their choice, but they had to if they wanted to continue to offer government financing. And then for the next couple of years, it's been very financially advantageous to hold that servicing. But now we see servicing values going up because interest rates have gone up. And what you're going to see is a lot of mortgage companies now are going to pivot and start selling that servicing, because it never was a commitment to service those loans. It was done out of either necessity or because it was financially beneficial to the organization to do that. What is unique about New American Funding's commitment, and this is what Rick and Patty Arviello told me when I started here, is Rick said the same thing you just said. Like, we're going to tell these clients that they're our clients for life, and then we're going to fund their loan and sell it to another bank. Like, how can you get away saying that they're your clients for life when you sell them off to the next highest bidder? And so there really is a long-term commitment to service our loans, and that is different than companies who take a best execution strategy, which says, I'll do it when it makes the most financial sense for me, but I'll stop doing it if it doesn't. You know what I mean? And that's the big difference, because a lot of companies sell direct and service. It's just, do they have a commitment to do it on all of their loans that they do? Obviously, jumbo loans and some of our state bond programs and that we can't service all of those. We do service some of our jumbo loans, but everything that we can, we do, and we always have. And I think you're right. It's a unique thing about New American. Thanks for pointing that out.
Absolutely. So Tony, you talked a little bit about the fact of how you've come to be a national sales manager for a company that's in 48 states. It's absolutely huge. How do you see your role evolving?
Well, that's a good question. I mean, look, I continue to want to grow in whatever position I'm in, and so I don't know what that looks like, but as the company continues to grow, I want to be a big part of our executive leadership team. And as far as the title or whatever, that's not really important to me. But my involvement in how it is that we support our sales teams and really just the overall direction of the organization. The more I can be involved in, to me, it's exciting to help, give my input and help to continue to grow the organization. This is a growth-minded organization, and I want to be a part of that. We're also a company that believes in growing and developing new technology. So, look, I want to be part of the conversation when we're developing new technology, making sure that we're building things that are actually helpful and useful to both our consumers and our loan officers. And I like being part of conversations around our marketing and how, what are we building next? What's the next direction? And even some of the stuff that aren't directly related to me, the call center side of our business, the consumer direct side of our business. I love being in those conversations, and if nothing else, raising my hand, giving perspective. So I think it's just continuing to immerse myself in, with the other, great leaders here and contributing in any way that I can. And my goal is to grow New American Funding's retail footprint. Like you said, we're lending in 48 states. I would love to see us continue to grow our overall loan volume and serve more families and continue to build up our servicing portfolio because it gives a lot of stability to the enterprise.
Absolutely. And just so you know, from my perspective, I can't believe sometimes the fact that if I have a problem or an issue that I need an answer to and I can't get an answer, or my manager Bob doesn't have an answer, it gets escalated up to you. And I mean, you reach out directly to me, you reach out directly to other loan officers. I absolutely love the fact that you're so hands-on, but also the fact that really that you take the time out to be able to do that. I mean, I really, truly appreciate that. I cannot imagine how much responsibility you have and still taking the time to be able to do that. But more than anything, it's having somebody running the show that runs it from a loan officer's perspective. And that is that's so wonderful because whether it's the marketing, whether it's the servicing, whether it's the pricing, that when we're out there on the firing line, we have to have great rates. We have to have great products. We have to have great technology to be able to really operate at such a high level. And I so appreciate the fact that you're there, you're pulling for us, you make sure that we have those tools to be able to get the job done.
Yeah, well, I learned from, my boss, right? Christy Bunce. I mean, Christy's a COO, runs the show around here. You're not going to email, her and not get a response back by the end of the day. It's just never going to happen. She's always going to get back to you. And I try to do the same thing. And, our production, team, Barty Patel and Kevin and, everyone involved really embodies this idea of, we're here to serve and support. And you can't do that if you don't return phone calls and emails and get back to people, So one of the most important things I do is I have, mechanisms set up. Like I said, I make time to be able to get back to people in between the myriad of meetings I have every day. And then I make sure that, I have someone watching my email, flagging the important things, making sure that things don't fall through the cracks because there's a lot coming at me. But you know what? Every single family that's behind, look, if you're reaching out to me, it's because you're trying to serve a family and there's somebody who's, something's going wrong probably. Otherwise, why would you call me? And so that's real, that's important stuff. And at the end of the day, there's only so many people who can make those quick, decisive decisions, and you need to have access to those people. So we try to do that to the extent that we can. And I really think it's part of our secret sauce, to have a company this big. And you tell me, but I mean, it feels like a small company. Even the 8 years I worked here before I was in executive leadership, I'm like, I can't even believe we have 4,500 plus employees, you would never know it because you feel like you're working for a small local company because of the way we've built the support. It's pretty unique and cool, and it's part of our secret sauce, I think.
Absolutely. And the company that I was with previously to New American Funding, I'd been there for 8 years. And during that time, it had grown up to be really it was a huge corporation, and there were so many layers to be able to get through for any kind of a decision to be made. It felt like I was just a tiny, tiny little gear in this huge machine. And if my gear broke, it wouldn't have any effect on how that machine operated. And the fact is, when I originally came and talked to you and talked to Bob Haley about coming to New American Funding, I knew that Bob had a lot of integrity, and I didn't know you that well yet, but I felt that you were a man of integrity. I just got that feeling from you. And because it was really hard for me to move from a company that I had 8 years history with and had great history with them. I mean, it was a good relationship. And the thing that really struck me was, the promises that you both were making to me about how this company operated. I thought, if even half of that stuff is true, it's going to be a good move. And it turned out all to be true. And, one of the things that really blows my mind is when I'm doing a transaction, I have a 30-day close. When the docs are sent to title on that transaction a week early on a 30-day close, and the realtors are like, what do you mean the docs are already in title? We're not closed until next week. How did you do that? And so, the operations for New American Funding are second to none. How did you get to this point? Because none of the other companies that I've ever worked for, usually you're waiting, you're praying. I'm praying like the day of closing. Please get those docs there on time. How do you run a company this large and still be able to have docs way ahead of schedule going into closing? It's the operations department, I know, but you're in charge of that. How do you do that?
Yeah. So the answer is a service level based process. Okay. So let me explain what I mean by that is that, a lot of companies will allow their processors to kind of control when they work on their files. And what they do is they manage to a closing date. So they're like, okay, so, today's the 7th and I have until the 25th to get it done. So you know what? I don't need to work on this file today. I'm going to work on some other more important things, or that's a difficult loan or whatever. But what might end up happening is that loan doesn't get touched for 7 days. And then all of a sudden it's like, oh shoot, I need to work on that. And then they hurry up and work on it. So the expectation that we have, especially here in the Northwest region, right? So between, Lisa Britton and Lori, who run the operations here in our region, I know it's like this in every other region, but it's some version of this, which is it's all service level driven. So when a loan comes in the front door, the process, the PA has X amount of time to get it ordered out and moved to the next milestone. The processor then has to review that file and get it submitted to underwriting or provide a needs list within a very distinct amount of time. Not the amount of time that they say, well, I have 30 days, so I'll just wait and do that in a week from now or 2 weeks from now. That's an unacceptable process. And so by following these service level requirements at each step along the way, what you ensure is that your loan is ready to go early. And then we have what's called the 1075. So there's a report that comes out literally every single morning. It's color coded. It's the whole pipeline. It goes out to all of our managers, all of our processors, and we're going to highlight in different color codes based on if a file is 10 days from closing and it doesn't have underwriting approval yet. If we still have conditions that aren't submitted at 7 days, we're going to notify that. And if it's 5 days before closing and docs aren't at escrow, it's going to be red. And everyone knows that these files are a priority because it's 5 days before closing and they're not already at escrow. So the 1075 is how we manage the end of the process, and managing to service levels right from day one is how we can manufacture a loan as quick as we do. And then everyone buys into that process. And not only, look, we have some of the best operations people, the processors, the PAs, they're amazing. But we also have reporting behind that to make sure that things don't slip through the cracks, because like, even the best person makes a mistake, and we want to be able to catch it and let them know, hey, this file hasn't been touched in 5 days. We have a 36-hour, requirement that a file's touched every 36 hours, even if nothing's happening on it, so that we know, that it doesn't fall off the radar, if you will. So it's those sort of mechanisms that we have in place, Jeff, that allow us to orchestrate that. And again, a lot of people in the mortgage space, when they think about, coming to work for a company, a lot of times it's about the flashy things. It's about some special technology, or it's about the interest rates they think are better, or whatever the case may be. And at the end of the day, the only thing that really, really matters at the end of the day is that the manufacturing process of that loan is spot on, because that's what's going to ensure your borrower has an amazing experience and closes on time every time. So that's our priority. That's our secret sauce, is to make sure that that happens. And then the flashy stuff is all of the extra stuff, So anyway, that's a great question. Not a lot of people hone in on operations, but I'll tell you this. I've had a lot of people that have chosen to move on to a different company because of the flashy stuff, only to come back because of the operations. Because at the end of the day, like I said, that is the most important thing. So thanks for pointing that out. I wish all of the people that I interviewed gave me such a great opportunity to talk about the amazing things that we do here. But it is unique. It is it's a different kind of company. And I appreciate you pointing it out.
Well, I know that as a loan officer, it's pretty tough going out and talking to realtors, and especially they may have long-term relationships with people, and to be able to go into that conversation and to be able to share with them things like, does your current lender have docs and title a week early for you? They're like, they look at me like I just slapped them or something. As who does that? Who has docs and title a week early? Well, I do. We do here at New American Funding, and that is a great conversation to have. And the technology, even since I've just been here for 2.5 years now, our technology keeps getting better. It's like, do you have a whole team? And that's a question for you. Do you have a whole team that actually is working on simply the technology and how we're updating and staying not only current and relevant, but we're actually blowing by the competition? How do you do that?
Well, you have no idea what's coming next. Okay. We have a lot of technology on the forefront, and I did not tee you up for this question, but yeah, we have a huge team. We have a team that's focused on making sure that, our point of sale solution, Rapid App, is going to be the best tool that it can be. And we have a team that's working on our new CRM system that's going to replace Bankerview, which we've had for many years and was a great technology, but it's got to evolve and get to the next level. We are rebranding our app and interface with our realtor partners that was Townify and is now Zigzag Connect. So every single one of our technologies that we have right now is all being upgraded to be, kind of that next level. And we do have a huge team, and we're actually just in the process now of starting up NAF India. We're actually starting a technology company based in India to help us with building and continue to build and innovate the best technology to support the mortgage industry. And so, that's another exciting thing. But yeah, we have a huge technology team, Jeff, that is committed to providing all those tools and resources to help really the borrowers have the best experience possible, but obviously it benefits our loan officers as well, who get to leverage that technology. So more to come on that. You're going to be excited.
I already am, because you talked a little bit about the new application process, and I've noticed that as soon as a borrower actually is involved in that application process, an email goes out to the realtor. Realtor that referred the business, and used to be that we'd have to get, to a certain point in the process before we'd call the realtor and go, yeah, they're applying and we're working on them. Now it's like, bam, real time, as soon as they're making that application, shoots an email out to our realtor partner and says, hey, your borrower, your buyer is started the application process. We're involved in getting them pre-approved.
Well, the thing is, Jeff, is that, and you're going to see more and more of that, because I believe that what we can do is all the things that the technology, that the computers can do better, faster, and more consistent, we should let the computers do. And it's going to free us up to do the things we talked about earlier, which is consulting with a client on making a good financial decision, right? It's going to be going out and meeting more real estate agents or more financial advisors and building our network, if you will. Those are the things that the people should be out doing. The humans should be doing those things. They should be talking to their clients, giving them advice. They should be doing total cost analysis for them. They should be out meeting new people. Let's build the technology to make the borrower experience as streamlined and as easy as possible, and automate as many of the touch points that we possibly can, not so that we can eliminate the need for a loan officer, but so that we can free up their time to help more families, and give better advice. And that's really the direction that we're continuing to move in. And I think you'll see a lot more enhancements in that direction. So, I appreciate you asking me those questions. It's always fun to talk a little bit about the great things that we're doing here. I do want to bring us to a close because we're over the timeline that I typically have for one of these conversations. And but you know what? It was worth it because this was a really great conversation. And Jeff, maybe in one of our future episodes, we can have you back on and we can unpack a few more things that are going on in the business world, and things maybe a little bit about our personal lives that we can share as well. So I appreciate you taking the time, being on Market Shares with me on this episode, and I look forward to getting back down to Portland and going out and grabbing dinner with you, or just hanging out and catching up in person here soon.
That sounds good. Tony, thank you so much for having me on. Thank you so much for answering the questions. And more than anything, just thanks so much for being who you are and being such a huge support. You are truly appreciated.
Well, right on, Jeff. Those are kind words, and I really appreciate it. And until next time, you guys, this has been Market Shares. I'm your host, Tony Blodgett. Jeff Dreyer, thank you so much for being on today. And until next time, take care, and I'll see you soon.